We've got one more panel left for this morning, and that's the practical use cases of tokenization within debt and asset management. The moderator is Stephen Whyman, the head of debt capital markets EMEA at Fidelity International, and he'll be introducing the panel before you then have lunch.
Thank you. I realise we're thinned out. Oh, blimey, it's what I said. You can tell it's going to be one of those panels, isn't it? Thanks for being here. Before I know you're all desperate to run off for lunch. As it was said, my name's Steve Whyman. I run DCM, Debt Capital Markets at Fidelity International. I'm sat here as well because I was co-chair of running our tokenization of our money market fund earlier in the year on JP Morgan's Onyx. I'm going to go down the panel and ask them all to introduce yourself, and then hopefully we'll get stuck in.
Sabih, Behzad. I head digital assets and currencies at Deutsche Bank. I've been doing that role for about 3 years. I've been at Deutsche Bank for about 15 years, and more broadly in the industry for about 25 years.
Hello, everyone. Lorenzo Rigatti, the founder of BlockInvest. We are a tokenization provider for financial institution, and we're active since 2019. And happy to be here and share what we are doing.
Shreyosee, product owner, UBS Group Treasury Digital Assets team. Here we take care of a lot of tokenization initiatives in the security space, as well as digital currencies and CBDCs. Glad to be here.
Thanks for that. Welcome. Okay, so we've taken our topic and we've tried to split it into two clear, distinct questions to give it the most time. Now, as you probably all know, it's a massive topic and you can go in all sorts of directions. So bear with us as we try and give it some structure. That's my fault more than anyone else's, so good luck. So we've seen bond issuance from central authorities, global agencies, and we can name a few of them. But we're now past the proof of concept phase. I think we can all pretty much agree that. There are lots of challenges still before we get wider adoption. So I want to ask the panelists to think about the use cases they've seen, the emerging themes, the involvement of the central authorities, and whether we need the digital cash leg and how long that's going to take. What impediments remain till we see these mainstream use cases? How do you envisage, that's lots of questions, how do you envisage the further evolution over the next sort of few months, or 24 or 12, and then what really needs to happen to start to see better use case and development of secondary liquidity? Shrey, I'm going to come to you first, and if you could talk through the scene you set with your work with Siemens and KfW, and give us some insight into the work you've done and where you think it's taken us and where we're going to go.
Sure. Thanks, Stephen. To start with, I think tokenization in general will continue transforming the way regulated financial assets operate today, right? The fact that you can represent any real-world asset now on a digital ledger makes the process of issuance as well as exchange of ownership much more seamless. So digital bonds is one such example which has the potential to kind of further streamline the debt issuance process, either whether it's from a back office perspective or automating lifecycle events in the smart contracts, etc. So a recent survey by the ISA actually mentioned that bonds are emerging as a central asset class for tokenization. As you rightly mentioned, right, we have seen quite prominent bond issuances in past few years, starting from private placements to public benchmark bonds, etc. As you rightly said, there's one key theme that I also notice is that the involvement of central banks as well as having some amount of regulatory clarity, especially in Switzerland, Germany, and from HKMA, has made, I would say, has motivated more issuers to issue digital bonds. Maybe there's a reputational angle to it as well. So I come from a Swiss bank, and I definitely noticed that because today the Swiss National Bank allows, as part of a project called Helvetia, for us to settle digital bonds with a live wholesale central bank digital currency. And with that, I have seen a pickup in the digital bond space in the Swiss market as well. So we are definitely beyond this POC phase, and we are quite a lot thinking about the commercial benefits, the business benefits, etc., right? To the second part of your question, you mentioned what are the impediments, right? I think one of the key impediments today is liquidity. So if you think about it, a couple of years ago, we had these digital bond or digital issuance platforms which were creating these siloed liquidity pools, and it was very hard for investors to access those digital bonds. I would say right now we are somewhere in this transition phase where investors can actually access the digital bonds either via the DLT infrastructure or even via the traditional infrastructure, which is good from investor reach perspective. It shows that as an industry we are thinking about interoperability, but I see there's a problem there. The liquidity is actually moving from the digital to the traditional infrastructure, right? I think which is fine for now, but until we have a more interconnected digital ecosystem, but we very quickly have to think about that, right? And the second and very important impediment is that we are not thinking about a business case, right? So we all know that by virtue of the technology, we benefit from back office reconciliations, operational efficiencies, but whether those benefits are being passed on to the investors and the issuers, I don't think so. And I think as an industry, we should think about it much more. So I'll pause there.
Yeah, it's a really good point. I think just from my own experience, when we're looking at these digital bonds, we're always thinking about what's the benefit. It's not just can we, it's should we. And I think to date, it's been a real problem there. We've seen these proof of concept bonds, but they're not always either cheaper and quite frankly, they're just quite cumbersome. Now, we've invested in them before and we've learned a lot of lessons and we've designed our own playbook, but I'm not sure that every asset manager has had that luxury or has that time. So yeah, it's a really interesting point. Lorenzo, can I ask you to talk about your sort of cross-border? We talk about fractional, like, sort of the splits of markets. I know you've got a lot of exposure with it and working cross-border in particular with some of these digital securities. So if you could draw upon some of your experience and talk through that, that'd be great.
Yeah, I mean, as a tech provider, we were lucky enough to be exposed to different jurisdictions and different use cases, because not all the tokenized bonds are created equal, okay? Apart from the joke. We started with a private placement, so as you were saying, so the simple use case, mainly green bond, issued under Luxembourg law a couple years ago. And then in that case, you have a process, okay? You have a DVP mainly based on traditional cash leg, so bank transfer, or you can also handle via stablecoin. Long story short, we know that in Europe we don't have a proper stablecoin to use, not yet. And so this was the first. A more structured use case is an institutional bond we worked on. And in that case, we use, we help our client to structure the DVP using central bank digital currency. And this was included in the ACB explanatory work. It was really challenging. But I mean, in that project, we had the feeling that something was moving really, at least in Europe. I mean, we need to be honest that probably for the first time in history, Europe is a step forward with respect to US, at least in terms of regulation, because we are better at regulate. But the thing is, now we are working on other more complex use case. It's not probably a corporate bond, but it's ABS notes with real-world asset. So particularly non-performing loan portfolios or real estate, commercial real estate mainly. So you can structure the issuance in different ways, but at least for us, the only way to make it happen is, it sounds strange saying by a tokenization provider, but forget about the token, okay? Create a token, it's easy. Create a tokenization engine is not easy, but create a token is. What we should do, and I go into the second question, what are the impediments? The impediment is that everything is done in the same way, and then you have a token, okay? And I also told to my team for a couple of years, I mean, if we just manage the token and we don't manage the tokenization of the process, we are in the marketing budget, Okay, it is. So what we're trying to do, also in the asset management, but we will see next, is try to put on chain most of the information and most of the rules that needs to be applied during the transaction. So this was our experience, and if I need to pick just one, the main impediment is, I mean, probably two. The legacy tool, okay, because they are big institutional. They don't know for a tech provider how strong it is to interact with software that are older than me, probably. But you need to align with this legacy tool, and also the market hour. So one of the promise of the blockchain is the 24/7. Crypto world never close, never sleep. But in reality, you have market hours in a regulated market. So you need to teach to a smart contract the cutoff time, the midnight. You know, so we need to find the best compromise between how to push the technology and I mean the legacy infrastructure that we still need to comply with.
Great, thank you. I think Gordon Gekko said money never sleeps. So I'm showing my age there for most people in the audience. So going on that, so the forget about the token, forget about that. I've always advocated, I don't think it's a technology problem for the new technology. I completely agree, it's the connectivity problem. But Sabih, what else do you think we need to see in terms of further evolution? It was interesting to hear, you know, that we've got the first digital CSD coming soon. We've got the sandboxes. So how are you exploring it? How are you advising issuers, clients to think about it? And what do you see the next couple of months, years to really bring to us for the bond market in particular?
Thank you, Stephen. Firstly, rather embarrassingly, I got your Gordon Gekko reference. That proves that you and I, at least, are of similar age.
We're laughing, yes. Unfortunately, yes.
So, I mean, you know, briefly, from a Deutsche Bank perspective, we've also, of course, been experimenting in the space, much like Shreyosee and UBS have been doing too. And maybe just to highlight two things. You talked at the start about getting out of the POC phase. I would say that first kind of phase was very small issuances, very few, if any, investors almost, and it was really a show of technology. And the two issuances we've done fairly recently, I think, contrast quite well. So one was KfW, the German development bank, which we worked with. That was a 100 million euro issuance, 18-month tenor. So larger in size than some of the other ones that have been, and also the tenor being longer than the typical, let's close this out over a couple of weeks because it's a show of technology. So it was real. We had real investors involved. It was done on a public blockchain, and it was done under German law, EPWG. I won't pronounce the German, but it was done under German law, and that essentially allowed us to cut various parts of the process out. It was a purely decentralized issuance. You can contrast that with another issuance we were involved in, which was the Siemens bond recently, which was part of the Eurosystem wholesale CBDC trials. And that was done on a private permission chain, so a slightly different setup, 300 million euro issuance, so much larger. But it was very closely linked to what Siemens had done previously. So in the previous year, they'd done a 60 million euro issuance. That issuance already was faster, so typically a T+5 process had been collapsed to T+2. This specific bond, that entire process was collapsed into a few minutes. And the entire settlement, because the cash leg was also available, was really, really interesting. And I think Shreyosee talked about it, Lorenzo also touched on the cash aspects. I think that's a very, very important aspect. And for those that aren't aware, very briefly, the ECB's been running under what it terms the contract group, a series of trials to try out different forms of wholesale CBDC, which is something the industry has been crying out for, the fundamental belief being that actually you only get the full benefit of tokenization by having cash on ledger, cash on chain. And the setup of these trials was basically to try and put market DLT, so market, the assets that the market will create, find a way to link them with the cash leg that's available from the wholesale central banks. And there were different models that were proposed. And we were involved in providing access to money under Target, one of the RTGS systems in the Eurosystem. So I think those have been kind of the key learnings, that we're now getting to a size of scale that's much more. We're getting investor interest that's more real. And I think it's part of the evolution curve. Those few issuances you talked about at the start, Stephen, to be honest, as we said, were shows of technology. Were they actually helping the process? No, they were actually costing more money, if anything. The kind of baseline then is to try and make something that's at least as good as what we have today. And I think, as Lorenzo was saying, actually the technology doesn't really matter. But from an investor perspective, you should feel the thing is at least as good. And then I think the next phase is going to be bringing in the programmability aspects, which I think have great potential to make this entire ecosystem faster and better. And impediments, just a very quick word on that, I would agree exactly with what Lorenzo was saying. I think the biggest impediment is there is a TradFi system that's not going to go away. We've got to come in Monday morning and still operate that. It's not that we turn that off and we turn this on. So that will continue to persist, and we need to figure out how to interoperate between the two.
Yeah, so...
Let me adjust for something, because we studied a lot the KfW use case. For sure in Germany, I mean, with respect to Italy, do things bigger, 100 million. But we used that experiment to, as a baseline to try to do something more. Was just 25 million, the first digital bond in Italy, but was regulated in T+0. So it's possible. It's hard, it's extremely hard, but it's possible. So it takes time, it will be a long process, but it's doable to say.
Yeah, I think that's fair. I think we know that it's possible, but it's the benefits, and I think bringing, you're probably going to point the finger all back at me, given on the buyer side of this equation, but I think, as I say, we come back to that point, it's got to be at least as good. And that's the part. If I think about conversations we have internally with our CIOs, with our portfolio managers and our risk takers, the benefit's got to be there, not just downstream, it's got to have an alpha opportunity as well. And that's what I think we've been driving, that's what drives our thought process around this bond market as we go. But it's good to see and hear across the last few days and today about that interconnectivity solutions that are coming, because that's only going to drive greater transparency, greater movement, and that should, so I say should, with my inverted commas, drive greater liquidity for everybody involved and drive the bond market forward. I think with only 11 minutes, I'm going to try and focus on our second part of our question, which is the asset management part. Alluded to right at the start, we were part of the team that tokenized our money market fund for use as collateral. I think that collateral conversation from an asset management in the asset management world is a huge thing for anyone who uses derivatives. I think the other part of the blockchain conversation, since I've been around it, and not as long as some of you guys, but I think it's heralded as the sort of silver bullet for AUM distribution, to be able to raise assets or to distribute your product into new markets. We've heard a lot about that lowering of the minimum investable amounts. But I think it's interesting for me that I think there's lots of solutions that the asset management market should be thinking about, not just that one, and I honestly don't believe that we've got there for the distribution model yet. Where does the panel think that tokenization really can help for the institutional investor? And I say that as asset management, whether that is that more to do with distribution, is that to do with the smart contract piece of processing some of these transactions? And I say that a little bit tongue-in-cheek, because I always worry that growth won't come just based upon efficiencies alone. I think there needs to, again, that alpha opportunity at every start, but that ability to make money. Can we talk through the greater utility that this technology brings? And then some examples of the journey you guys have pursued and where you are would be great. And I guess the last sort of like inflammatory point for this have historically we've been tokenizing the right product. That's from an asset management level, from a bank level. You know, how are we doing the right things? So Sabih, let's start with you.
All great questions, Stephen. I think from the perspective of what benefits, it's ultimately about liquidity, right? That's what this game is about. And I think I would agree with what you were saying. It's not just got to be better, it's actually got to be a lot better. Because if it's not a lot better, then the inertia of having to change and move from what we have today to this brave new world is simply not worth it, right? I think that's the way I look at it. But I do, as I said earlier, see it as a little bit of a, kind of a cycle. We're not going to step through different elements of this. The first element is just getting the experimentation done. The second element is getting it as good. And then the third is the leap. And I kind of feel we're at that transition step between the second and third at the moment. We're starting to get, as Lorenzo was saying, Shreyosee was also alluding to, we're starting to get the size and scale now that is making a difference. So I think that, that would be my first kind of comment. And I agree with you that it's not just about cost and efficiency. I think that's got to be part of it. And that has become more important because the input cost, which is money, has become more expensive. It's a more expensive thing than it was 2 or 3 years ago, and it's unlikely to change. You probably know that better than I do, but I think it's unlikely to change. So we're going to have to deal with figuring out how the input cost of what drives all of our companies, that's gone up. How do we make that more efficient? So moving that more efficiently, whether it's in the collateral management context, whether it's intraday liquidity capture of some sort, I think those are the sorts of things that become important topics. So that cost piece for me is important, and it's the easy thing to explain. But I think the real opportunity is going to come, as I said, from the programmability. It's what you can do that you cannot do today. And I think it's, creating new business models off the back of that that's going to be the real opportunity.
Yeah, thanks. I think that's great. Shrey, going back to you, and your sort of role is on the Treasury function, and I'm conscious we've got 7 minutes left and I should stop waffling. But just as an investor from that Treasury function, think about yours and with your investor hat on next to mine rather than the opposition. How do you think about sort of the growth of asset management?
Yeah. I think from a Treasury point of view, right, any asset that we would like to hold in an asset portfolio, we would definitely look at the monetization aspect. So how easy it is to monetize. So for example, even in the digital bond space, we not only issue digital bonds, we purchase digital bonds from the market and to basically diversify our HQLA portfolio. And often we are kind of, the roadblock that we face is how easily can we monetize it? Is it HQLA or not, for example, right? So I feel that the collateral mobility is very important to, for any asset to be purchased or invested in.
Good to hear, because otherwise our tokenization of money market fund was a waste of time. And Lorenzo, just coming to you, what do you think some of just talking about that last question around, are we tokenizing the right products? Examples you've got of pitfalls you've learned, of clients you've seen, and where do you think, what should we be looking at?
Okay, we are tokenizing the easiest product. The easiest product to tokenize, the easiest product to sell. But let's start with a simple consideration. Most of the use cases out there in the fund industry are not native token, are collateral. So let's say digital twin. So it's a way to start before and issue and explore a new market, try to get probably crypto investor. We used another approach. So we are working since like 14 months now in a project that is not yet live, but to tokenize natively the fund shares. And if you make a native token, you can explore new things. And you can realize that, again, if you're committed to tokenize the process, forget about the token. You need to bring on-chain the fund accounting that needs to put the net asset value. So you need to build up an oracle. You need to have the transfer agent model. You need to comply with possible corporate action or unexpected event, like we have an error in the net asset value 2 days ago. So what happened? All these scenarios should be handled by the blockchain. And coming back to the programmability, so it's complex, but we have a nice tech that can help us to drastically improve the process. But the only way to have a positive ROI of the project is to use the technology for real and 100%, not just partially. Otherwise, it's complicated. If you use partially internet, we are not always connected, so it's hard to live nowadays. And for the blockchain, it's almost the same. So coming back to your question, we will see that in the next couple of years, probably we will have more sophisticated product to be tokenized. I think that the MMF could be useful to as a kind of cash leg for asset manager to manage the switch between funds, okay? But we expect to have open-ended funds tokenized, where the main benefit is the operational efficiency, because we already have the liquidity there. Instead, for the closed-ended funds, the benefit must be the liquidity. must be a kind of secondary market. So this is the only reason why you should tokenize something like that. If you don't have a liquidity, again, you're in the market budget. But I think that probably it will take longer than we thought. And but I think that just tokenize an MMF, it's just the beginning. I will never believe that a big player issue a product like that and put a lot of money on the table just to issue an MMF. For sure, there is a bigger plan, and we will see. But
yeah, I think you're right. I think it's growth to come. We've got 3 minutes left. I was told to leave at least a minute for questions. So before I go to that question, I'm going to go back to my panel really quickly, and in one sentence, this space, whether it's to do with bonds or to do with asset management or to the growth of the digital space, in one sentence, what gets you most excited about the next 12, I'll even say 24 months if you like, but given that we might all be back here on some panel or other next year, it'd be interesting to see what you think is going to be the most exciting thing over the next 12 months.
I think I'm most excited about the advancements that we're making in the digital currency space and digital cash space, honestly, both from the private sector as well as from central banks, because I feel that how much ever we tokenize assets, we would need a purposeful cash solution to settle it.
4 years ago, this kind of event were like only startup and few institutional players that probably were paid to simulate some kind of attention, right? Now, if you can see, is exactly the opposite. So I don't have the crystal ball. I hope that in 12 months we'll change something, but probably there will be 36. But the only thing that is, is clear is that TradFi is going on chain. Sooner or later, we're going on chain.
I mean, to borrow from the excellent comments I've already got, my view of the space has always been there is a horizontal here and a vertical that you need in order to get this thing to scale. So for me, the vertical here is all the different players. You need central banks involved, commercial banks involved, fintechs involved, regulators involved, etc. And I think, as Lorenzo was saying, we're seeing that, right? The room shows that. So that's one piece that I think is developing, and of course, asset managers as well. I should say, Stephen, in deference to you, right? Super critical that everyone's involved because the money flows across all. And then the other piece is we need, from a horizontal perspective, we need each part of the value chain to be involved. So it's issuance, it's trading, it's settlement, it's asset servicing, it's custody. Those things are starting to come online. So those are the things that
make you excited. We've got 45 seconds left, so I've got time for one question. Is that okay? So are there any questions from the audience, or have we stunned you with the amazing insight? Or does everyone just want to go to lunch? We can run for lunch. I won't feel embarrassed or upset at all. Lunch it is. Look at that. With 25 seconds to spare. There you go. I guess I should say thank you very much to my panel. It's been a pleasure to meet you all and get to know you all, and thanks for the opportunity to be up here.
Well, I definitely don't want to be standing between lunch and yourselves, so I'm going to wrap up this morning's session by saying a huge thank you to all of the different panelists. I hope you found it as insightful as I did. And one of the things that I've really enjoyed about this morning is we began by talking about the need for regulatory clarity, collaboration and upskilling, and those were themes that have continued throughout the morning and I'm sure will continue out throughout the day. Anyway, I hope you have a great rest of the day.